Welcome to Season 4 of the Biz Show, sponsored by InvestQuire. Discover what's next with this insightful podcast. And now, your hosts, Barry and Lisa.
Hey, Lisa, how you doing?
Hey, Barry, I'm doing great. How about you?
I can't complain. You know what? I woke up on the right side of the dirt, the top side, right?
That is your liner. That is your one-liner. We got to get
That
you.
is.
It's so
I know. I need to come up with new lines every single week.
Yes.
Hey, speaking of weeks, man, this week has been crazy for us, hasn't it?
Oh my
It's
gosh.
been a very busy week.
I couldn't even take a break to go get a drink of water. We were on a Zoom, 6 hours on Wednesday or Thursday? Oh my gosh.
Yeah,
It was
yeah.
like every day.
We have a lot of big things in the works, and we're just working them to try to get them through and over the goal line, right?
We are getting close. Oh my gosh, this is going to be so epic. I'm so excited to be involved in this business opportunity with you, and I just can't wait to see what happens. We're just pushing forward. We're going to get through the hurdles, and I think we'll be having some really good results from our effort.
Oh, yeah, definitely so. So listen, this is episode 2 of our video podcast for the Biz Show.
We had
Welcome,
our first
everybody.
show last week, and we have
Yes.
some really great people that are subscribing to the YouTube channel. So we thank you for that, and we hope to get more this week. So yeah, we're season 4, episode 2, right?
Yes, we are. Please do us a favor and subscribe, hit that bell, and make sure that you can help us grow this channel, right? 'Cause we're here to help you grow your business. And the only way we can do that is we get the word out to other people. And we also got a lot of guests coming on this season that's really going to play a lot, right?
Yeah, I
Yeah.
can't wait.
Yeah.
So yeah, and if you want to be our guest, just let us know that as well, so we could pop you into the calendar and have you on our YouTube podcast as a guest.
Yes, as long as you're not a serial killer or anything like that, that's not your business, then we'll be more than happy to chat with you, right?
Oh no. We don't do any podcasts with those types of people, so.
No, we don't. So anyways, episode 2, right? So we've covered this topic a couple times in our other 3 seasons that were just audio, but we're really going to focus today on the differences between LLCs, S Corps, and C Corps, and which one is really right for your business, depending on size and depending on taxes and structure and stuff like that. All
And
right?
just a little disclaimer, like we are not your CPA. We totally advise you to consult with your CPA on the right structure for you, but we're just here to give you a little bit of education about it so that you can be thinking about it when you do approach a conversation with your CPA. But there's
Yes.
tax benefits and, different things for different people. So we want you to dive into this podcast with us to learn and then take it to a conversation with your CPA or whoever does your books for you. And if you need a recommendation, we have those too.
We do. We have recommendations, but yes, we are not legal counsel, and we are not your CPAs. So what we're going to teach you today and talk about really is just the overall structures and then where they might plug in and fit based in certain businesses. And typically that's what we do with all of our podcasts for the Biz Show. But we're more than happy to sit down with you on one-on-one conversations and discuss your particular needs. And then we can help coach and mentor and advise you. But at the end of the day, yes, still get that CPA and stuff. Okay, so we've talked in this many times, as I said, right? We've talked about sole proprietorships and partnerships. We're not going to talk about those today. Those are pretty self-explanatory. But we are going to talk about LLCs, S Corps, and C Corps. Specifically, let's start with LLCs.
Yeah, I mean, a lot of my investor clients will formulate an LLC so that they could put each of their properties that they purchase under the LLC structure. So this is a very common one that is easy to originate. So yeah, let's
It
dive
is. First of all, let's define LLC. LLC stands for Limited Liability Company, right? And basically what that does, it's structured similar to a corporation where it separates you and the company as 2 separate entities. So if the company gets sued, you don't personally get sued. And then if you personally get sued, they can't go after the company.
And that is the advantage of all of these structures, is to remove you out of the liability, so that if something were to go wrong between a customer or a client, then you won't have to be directly sued or impacted, like your assets, your home and things will not be affected. So you have that layer of protection.
Exactly. So the differences really between these three, and specifically the LLC, is the fact that the owners, members in the LLC are not shareholders, they are members, right? Whereas in the corporations, you're a shareholder. It's really semantics. It's pretty much the same thing, but you're a member. The government recognizes you as a member instead of a shareholder, right? So that's one of the things.
Now, in all of these structures, you will have to file two tax returns, because you'll have to do one for your personal self, right? And then you'll have to do one
Yep.
under the structure that you are identified as. So just keep that in
Yes.
mind. A little bit of an extra, invoice maybe coming your way from your CPA, but that's, you're also saving a lot of money in taxes and removing your liability. So it's worth it.
There are, and we'll talk a little bit about tax structures. And again, this is something for you to really have that conversation with your tax attorney, your tax accountant, but because the tax structures are different, right? And in a LLC, you still are passing through that tax to the member. Now, it can be structured, and you can pay your taxes differently as it were in an S corp with LLCs. You would have to again talk with your tax accountant and stuff like that. But there are a couple little avenues that you can take. And honestly, probably the best tax structure of all three of these is the S corp. So you might want to take a look at that and see if
Yeah.
that's going to work for your company.
Yeah, that's what I have. I have an S corp, and it's been good to me. I got to tell you, I was a sole proprietor when I started out with my husband. We had a company, and we had to pay so much money in taxes. And then we consulted with our CPA, and he's like, "You have got to start an S corp." And it was the best thing that I ever did, because I was sheltered under that S corp, not only for liability, but also, the self-employment tax really shrunk. You get this large self-employment tax when you own a company, and that shrunk down to a lower percentage having the S corp umbrella over us. So that was a huge
Right.
benefit, tax savings. I love it.
Yeah, definitely. So well, let's jump into the S corp then and talk about the S corp and kind of the differences there, right? So the tax collection made on this one from the IRS is really not a legal structure, but it kind of is, and it's hard to explain. But basically, the good thing about this is you avoid double taxation, right?
hmm And then you do have the shareholders that you can appoint under the S corp structure. And if it's just you running your company, then you would take 100% of the shares and name yourself what, the CEO and the CFO and the COO. But you can always add and appoint different members under the S corp.
Yes, well, you have. Well, yeah, you could. Yeah, exactly. Which is kind of separate from the C corp, but the S corp really allows you a broad avenue to kind of operate inside of, or I shouldn't say avenue, but a broad box that you can
Structure,
operate inside of. Yeah, yeah. So that's really good. And so if you're a sole proprietor and now it's time to step up, S Corp is probably going to be one of the better ways to go first.
yeah.
Or the LLC, but at the S Corp, if you need a little bit more structure than what the LLC gives you. So, and with the with the S Corp, you only get 100 shares, right?
Yep.
So those shares, you have to divide them among whoever are going to be shareholders in your company. So if you've got five shareholders and yourself, that's six, you know, you got to figure out the percentages and stuff like that, who owns what and things. And basically, all three of these are cap tables, right? So you got a capitalization table that basically shows the ownership.
Exactly. That's what that will point to, is the ownership levels. So, yeah, so that's a great way to identify it and give some people some shares in your corporation. And there's a huge benefit on the S Corp. And now we're going to dive into the C Corp and talk about those differences.
Yeah, I've lived here many, many, many times. This is really my home turf, coming from corporate America in the C Corp, as a CEO, a CIO, COO, and just as an employee, right? And then all the back at GE Capital and everything else. So C Corps are your standard corporations, right? And they're your personal structures. You now have millions of shares, and it could be 1 million, 10 million, 100 million, 1 billion shares, right? These are your Facebooks, your Google, your LinkedIn, and all those companies. They are all C corp, and there's a reason why. If you're LLC or you are a S corp, you are not and cannot, and you're not allowed to be on the stock market. You're not going to go public,
Right.
right? So if
So,
you have intentions somewhere
yeah.
down the road to take your company public, you can start it out as an LLC or an S corp, but before you go public, you hear the term all the time called IPO, right? An IPO means you're in the phase to go public offering, right? Initial public offering is what IPO stands for. And then that's typically about an 18-month phase where now you're legally moving the structures around and accounting and all that stuff to meet the requirements and regulations for the SEC and the stock market and the federal government and everything else.
We have a client right now that is trying to go public with his corporation, right? And he's a C corp. So yeah, if you start out at the LLC level or S corp, you can always just switch it into the C corp.
You can, but know this: you can switch it, and it doesn't take that long to switch it. But you're not done. You got a lot of homework and a lot of prep work and changes that you have to make. And as I said, that's typically about an 18-month process to do that. But that's where you go public. And then the thing is with this, typically you do get double taxation, right? Because the corporation is taxed, you as an employee is taxed, and then the shares and dividends that you got are taxed. So there's a lot of taxing going on in the C corp, right?
Yes.
Um,
Which is why I stayed away from that. I don't think I'll be going public, but you never know, right? Who knows?
in a past company, right, World Internet, we worked with a couple different companies, and one we did a little bit of work with called Epic Systems.
Hmm.
And Epic System is ran and owned by Judy Faulkner. And Epic System is the biggest medical healthcare record company in the world. And Epic Systems, well, at the time I haven't really checked in on them, but they were probably worth about $3 billion in worth revenue. Private company. It's the only company in the medical business at that level that was private. And she kept it that way on purpose because she doesn't need 25 million shareholders and shareholder meetings and all this stuff trying to figure out what to do. And it actually paid off well for them because they could pivot fast, right? So you and I talk about this in all of our previous episodes, and you're probably going to hear it a lot here too, the word pivot.
Yeah.
And basically they could make decisions on a dime and change direction. And in a private company, you can do that, right? In a public company, you might need shareholder votes or board of director votes
Yeah.
to make all that happen.
You
So,
have to have a board meeting and all that. Yeah. Takes a little
yeah,
bit longer, slows down the process of making those pivots or changes or new rulings.
yeah. So the pros and cons, right? LLC, it's a simple setup, it's flexible taxation, minimal compliance. It's great for starting. But the
Yeah.
pros or the cons are really it's hard to attract investors. Investors aren't really keen. Sophisticated investors and large investors, family offices, private equity firms, right? They're really not that interested in LLCs. It's not that as LLC is going to be hard to attract it. You're going to have to change your structure. You might get into them and they're going to say, okay, you change your structure and then we'll do business.
Yeah. And that's an easy thing to remedy. So, yeah, LLCs are very popular. And then you have S Corp, which is the tax savings on your self employment taxes, like we mentioned earlier. It
Yes.
has income. You can actually set up how much you're going to be paid by your corporation so that you do have a lower tax liability on the salary that you're setting up to be paid by the S Corp. So that's the pass-through income. And then you still have limited liability, which is a plus in the plus column. The cons would be that you have limited amount of shareholders and there's no foreign investors because there's very strict requirements. So yeah, so back to the investor. Yeah.
Yeah, there was a company that I was dealing with and working with a little bit ago. Nothing ever happened with us and them. Actually, I shouldn't say us. I should say we.
Right.
And they were a C corp, and so they had, I don't know, they were a limited liability. I'm sorry.
Oh, they were.
But they had probably brought on like 115 investors to raise the capital. And of course, you only have 100 shares. So, at this point, you're giving out half shares and stuff like that, right?
Yeah. Do I know
So, nah. And we passed on, right? So we passed on working with them anyway. So it we won't name names or anything like that, but it actually got into right now it's in a big legal battle with all the investors and everything. Yeah. And so there was a hostile takeover involved and it went crazy. It went crazy. So you and I kind of saw what was going on and backed out and said, no, this is not. So,
yeah.
Okay.
Yeah, we don't
So you talked about
a lot of good pros and cons too. I mean, a lot more pros than cons on the C Corp, but
the C Corp, the cons are really the double taxation, and a lot of compliance, a lot of regulatory compliance that you have to do, right? But the benefits are every investor is going to love you as a C Corp, right? Because of the structure, multiple stock classes, preferred, common, all that. So, and preferred means if you're a preferred shareholder, you get paid first if something goes wrong, right? And versus common stock, well, you're just among general population of all the other shareholders. So, anyways, so let's jump in really, and we hit upon this already.
Yeah,
the taxes. We don't really need to know. Other than the S corp, you avoid self-employment tax, right?
Yeah, that's the big one. Yeah. So if your company is like cash heavy and reinvest profits instead of distributing them, then the C corp may be more tax efficient despite the double taxation. But again, we want you to run those numbers based on your company's numbers with your CPA to really see which one is going to benefit you in the end. So, but that's just a tip about the C Corp and all of the other structures that we just talked about with regards to your tax implications. And you want to be strategic because at the end of the year, I mean, the goal is to keep more money in your pocket and not give it to the IRS. And we have other, tax strategies as well outside of, talking about entity structures. So you can always reach out to us and talk about other tax structures and strategies that will help you save your tax liability dollars at the end of a year.
Right. And you said something in there. I just want to kind of reiterate something too, in the fact that if you are cash heavy and you do reinvest profits in the company, right? And so what that means, right? That means if you take the profit of that company and you put it back into the company for new projects and stuff like that, right? Then that's a good thing. If you are actually going to distribute the profits in way of dividends, it's probably not a good avenue for you, right? Because there's going to be big tax implementation.
Yeah.
If your CPA is good, they should know this, right?
I mean, hopefully, yeah, you have a good CPA that will advise you on how to take those profits.
Yeah. Okay. Well, the next thing that we should probably touch upon is how, not specifically how, but where you should register your corporation.
Yep.
Because people heard all the times, oh, register in Delaware, oh, register in Wyoming, oh, register in this, right? And even though you're in California or you're in Florida, And there are reasons for that, but there are also some caveats and gotchas you really have to watch out for, right?
Yeah, I mean, is it
Uh,
advisable to do that in your home state, like where you're living, right? Is to register your C Corp or S Corp or
yeah,
LLC in the state where you live?
there are states that are not friendly to corporations. California is one of them, right? So if you're in California, you register a corporation in California, expect to really get beat up a lot when it comes to that. There are companies there are states, Delaware, Wyoming, that are very friendly.
Yeah,
They don't really have any taxes. There's no fees, stuff like that, right? But that said, one caveat you really have to watch out for, and let's just use California because that's where you're sitting right now, Lisa.
yeah,
If you register as a Delaware corporation, right,
yeah.
then you have to register again in the state of California as a foreign corporation because you're foreign out of California, not a foreign out of the country,
Not
but
the
out
country.
of the
Yeah,
state.
exactly. Yeah,
And so now you're going to have to pay double fees, right? You're going to have to pay two fees,
yeah.
and you got more double the
We
paperwork to get done.
double the paperwork. I can't stand paperwork, so I don't recommend that. But it might be
And I just wanted to mention that because I've run into people in the past who've hit that wall and now they're in trouble because, oh, they haven't done anything in 3 years and
yeah.
now their corporation is getting delisted or it's suspended in that state because they haven't done what they're supposed to do.
Well, every year, I have to file a statement of information with the state of California because they want to check and make sure that the place that you're operating your business is matching what they have on record, or if there's any changes, then you have to update the records every year. So, and there's a
Yep.
fee around that, and I think it's like $800 or something. But yeah, so um,
They all want money. Show
yeah,
me your money. That's our government, right? They all got their hands in our pockets.
yeah, they want to make sure
Yeah.
all of.
Only thing I got in my pocket right now is lint.
Oh, no, Barry, don't say that. You
so so let's talk about really what's that?
you have gold in your pockets. That's why
Well,
you
maybe
want.
in the near future. Right now, I think it's copper, just a bunch of pennies hanging around.
So anyway,
It's a
yeah,
mineral, right? Copper's a mineral.
right.
So yeah, so anyways, just remember that piece, right? That if you do register your company outside of your state's going to require you to file as a foreign
Yeah.
corporation. So
And you brought up
okay,
Delaware, Wyoming, and Nevada, but Delaware is like favored by VCs, right? They love it because there's a lot of corporate case law that's protecting.
well, yes, because Delaware has gone and really spent a lot of time in case law and understanding the structures and putting it all in place. And then there's a lot of lawsuits that dictate case
Yeah,
studies and stuff like that. So
yeah,
VCs, venture capitalists, family offices love Delaware because everything's already established. If you're going to
yeah,
go out and do it in Iowa, well, Iowa, there's still a lot of unknown grounds and stuff like that haven't been covered. They can
yeah.
refer
Nevada
to,
has no state income tax, so that's a bonus right there. And
well, there
Wyoming,
are,
fees,
yeah,
right? Yeah,
yeah, there are what, 7 states that don't have state income tax? Alaska, Wyoming, Nevada, um, Delaware, I think New Hampshire, Vermont, one of them, I can't remember off the top of my head. And you can Google and look those things up, right? So that's right there can save you a lot of money. Not only that, there are states. Washington's another one. Oregon, Washington, yeah. Um, Washington and a couple other, and Wyoming too, don't have any corporate tax structures either. So you're not paying corporate tax as well. So those are things to think about when
yeah.
you're establishing your company, whether you want to
And we invite our
incorporate
listeners,
it.
yeah, leave a comment in one of our podcasts. I mean, if you have a comment about it or any tips here to help other people, definitely leave a comment on our feed when you're listening to our podcast or on our Facebook page. We love to hear
Yeah,
back from
definitely. Yeah. Well, let's talk about which structure is right for which company size, so on and so forth, right? Because there are some things that are better for other things. For instance, as we all know, if you're a small company, you're probably going to be either a freelancer or a solo entrepreneur or solopreneur, they call them,
Yeah.
or you're doing gig work or any of that other stuff. A sole proprietorship is going to be just fine for you, right?
Yes.
Um,
Exactly.
and then after that, you know, again, if you're starting to make money and that money is over a certain amount, 50,
Yeah.
$60,000, you probably want to start the LLC,
Or the S
right?
corp, if you want to take your income, your pass-through income.
Yeah,
Yeah.
exactly.
And a small,
And
like a
if
smaller
you,
business that has less than 10 employees or something like that would be more fitting to do the S corp or the LLC structure. Yeah.
exactly. If you're a tech startup and you're develop, whatever you want to incorporate
Yeah.
in Delaware and you want to be a C corp.
That's what you would recommend. Very,
Because as a tech startup, you are going and you want to attract VCs and all that stuff. So if
right.
you do that from the very beginning, you're already ahead of the ball game when it comes to
Yeah.
finding these people.
Then you're under the proper structure. Yep.
Right. And same with venture-backed startups, right? Venture-backed startups, which is again VCs and family offices, so on and so forth, is also a C corp.
And if you're planning to go public, like you mentioned earlier, definitely the C corp, right? That's the only structure that you can do that under. So,
It's the only one. Yeah.
so
Yeah,
if you have that
definitely.
goal, then you definitely just, start a C corp for sure.
Yep. Holding companies, asset management companies, banking, stuff like that. A lot of those are LLCs, and again, Delaware or Wyoming on those
Yeah.
sites. So take a look at that. Yeah, and we already discussed going public. So if you're going public, you have no choice. You can't even file the paperwork unless you are a C corp, right?
Right. And it's a
And
lengthy
and
process,
then
like Gary mentioned earlier. It takes a time, so you have to have patience with it and know that it's a long road to get there, right?
it is a long road to get there, and um, most companies, I mean, look, go back and do some case studies on some companies. Facebook, how long did it take Facebook before it went public?
Yeah,
8, 10 years,
it was about
right?
8 years, I think. Yeah,
Yeah, yeah. And so you'll see a lot of these companies. You know what? Let me say this. Think about it for a minute. Every single company out there has started as a small company, right?
right, exactly. The
I
one
mean,
man
look,
show, or you come up with an idea and you start this company. So yeah,
where
but
did Apple start, right?
yeah,
Apple started in Steve Jobs' garage.
yeah, yeah.
So so understand there's a progression to moving up. That progression is going to take a little bit of time, right? You can't
And that's why
be
a lot of
you,
people, yeah,
you
they start as an LLC and then they end up, in a C corp if they're growing, and that is their ultimate goal is to go public, and they're just having, a lot more employees, they're growing their company. So, and that's very normal to start as a structure that's more simplified, and then as you grow, you might change that structure. Yeah.
I would venture to say the structure is going to change a couple times over, right? Not
Yeah.
only you might change the structure from a C corp to another C corp.
You might
We
have
did this with
right?
World Intermed, and not necessarily that we changed the structure because the structure stayed the same, but we changed the shares that we had from 10 million to 100 million.
Yeah.
So there's processes involved to do that, and you can do that. Let's just tick the box here on some common mistakes that people make, right? And you know, one of the biggest mistakes I see is people only look at the tax ramifications of
Yes.
what is there, and just
And that's
because you get double
one. But
taxation on one, that still might be the best option for you. I mean, if you got 1,000 employees, a sole proprietorship is a really stupid way to
yeah,
go, right?
right, right. But always think about your end goal. Like we talk about this all the time, know your numbers, do a business plan, think about your goals when you're making these big decisions. But there's
Yeah.
always ways to pivot. So,
I had a friend I had a friend that reached out to me years back, and he was working in the San Francisco Bay Area, and he was in the plumbing business, and he wanted to start a C corporation and register it in Delaware. And I'm like,
yeah,
why? Why would you want to do that?
yeah,
You're a local company. Your footprint is the San Francisco Bay Area.
yes.
You're not going to step outside of the Bay Area. So why would you want to be a C corp and then also have to file as a foreign entity coming in and all that? You
Yeah,
just need to be a LLC.
that's right. Yeah, and
So
some other mistakes is not consulting your CPA. We told you at the beginning of the podcast, definitely talk to them. We're not the end all, the be all. We're just here to give you information. So if you're making these decisions alone, then it's probably maybe going to be a mistake unless you're really knowledgeable in these different avenues. Some
yeah,
people have maybe bookkeeping and CPA, backgrounds, and then of course you can probably make a suitable decision for your company. But I definitely say that would be a mistake not to talk to the CPA and find out all of the answers.
I
I
would
would say,
add an attorney. Talk to your legal counsel as well, right?
100%. Structure
Another, yeah, exactly. Another big mistake is thinking you can convert, from one corporation structure to another, and you can absolutely,
Oh,
but
money
thinking
though.
that it's not going to cost you anything. It is going to cost you.
Right. Yeah, that's
Not
less
only
stupid.
is it going to cost you in fees up front, but it's
Yeah.
also going to cost you on the back end of your company structure that you may have to massage, manipulate, add vice presidents, or if you're going to C Corp, now you need a CFO, a COO, CIO, board of directors, all that stuff that are not you,
Yeah.
right? So,
Exactly.
so there can be significant cost involved in making that structure. So knowing when to make that structure change is really important to
Yeah.
save you a lot of money.
And again, you'll be able to have that feedback from your CPA when you go over the financials with them at the end of the year, or if you hired, a management company such as Barry and myself, then you'll be able to talk about those things like where is the company headed and is it the right time to change structures? So those are conversations to be had not only in your own head, but with another consultant or your financial advisor. Yeah.
Yes, and
Purchase.
and the number one tip I would tell everybody, right, Lisa, and you and I have run into this so many times over and over and over again, is mixing your personal income with your company income. Like a sole proprietor, even as a sole proprietor, I don't recommend that because it's so hard for us. When you want to sell your business to stuff like that, we have to sift through all your financials and weed out all that stuff. And that costs time and money, and we're going to charge you for it. Right? So,
Exactly.
you know, keep your business books separate from your checkbook.
Yep, that's right. That's why you have to have the business account, and that's why we say, you'll have the EIN number and you'll be totally running it like it's, a separate entity. Hmm.
Yep,
Yeah.
exactly.
So here's
All right,
some
Lisa, well, I think that's a wrap, huh?
Yeah, that's a wrap, Barry. We had so much fun going through all of these different entity structures with you guys today. Hopefully, we helped you and understand the differences and the pros and cons. But we're here if you need anything. You could reach out to us. Be glad to answer any questions.
Absolutely. You can catch Lisa or myself at Facebook
Yeah.
on our the Biz Show page. Also, we are the co-founders of InvestQuire, so
Yes,
you can catch us at
Claire.
InvestQuire too, right? So
Yes.
please reach out to us. And listen, if you have any topics you would like to hear, have us discuss, we would be more than happy to talk to you about that. And as well, we do have a lineup of some really good guests coming this season.
Yay. I know. I'm
So
so
we're
excited.
looking really forward to that. We've got some pretty neat things in the works.
Because we learn from others. So we love to have guests on the show because we all can learn from them and how they, started their company, right? And what's
Yeah,
working for them, what's not.
experiences and histories. Yeah, exactly. All right,
All
guys.
right.
Well, thank you so much. Please don't forget to subscribe. We're looking forward to seeing you next week.
That's right. Have a great day, you guys. Bye.
Bye.
Thank you all for listening to the Biz Show podcast. Subscribe to stay updated and follow Barry and Lisa on Facebook at The Biz Show. Share your comments or suggest business topics that you'd like to hear. Thank you all for listening. Bye.